Hey guys, I'm Big Mike, and like always, we've got another fantastic webinar today, and I thank you for joining us. Today we have a webinar with Ryan Curran talking about tax strategies for traders. It's a timely webinar. Stage 5 Trading is sponsoring this webinar, so we also have Morad, better known as Futures Trader 71 from Stage 5, here to just very quickly talk about the products and services offered at Stage 5, and then to introduce Ryan at his firm so we can get started with the primary presentation on tax strategy. Some of the bullet points for the webinar today include an overview of trader tax status and the requirements for being classified as a professional trader to take advantage of that tax status, and some of the deductions available for traders, in particular professional traders. There's also a general Q&A at the end of the webinar, so if you guys have questions, Ryan has asked that you hold them until the very end, and then we'll do a Q&A and try to get as many of those answered as we can. The webinar is being recorded like always, and I'll post the recording on BMT sometime tomorrow. If you are watching the recording at a later date and you like it, please give us a thumbs up. It does help us out. All right. And with that, FT, I'm going to give you control first so we can get started with you. And, okay, you should have the option to share your screen.
All right. Thanks for inviting me on.
Absolutely.
Let's see. Do you see my screen?
We see it.
All right. Very cool. Okay. So a quick intro here. For those who don't know who I am, this is Futures Trader 71. I have to start with a risk disclaimer. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. We're a Big Mike Trading Forum sponsor, and Ryan, who's joining us here with Curran LLP, is actually my personal accountant, our corporate accountant at Stage 5. He also handles my charity as well as many others. In saying that, Ryan is very much on top of what I do and on top of what our industry does, and is very, very capable and very good at what he does. So we felt it important to invite him on. A quick rundown of Stage 5 Trading. We're basically a boutique firm. We started as a firm 2.5 years ago. We've been in the business for about 3.5 years. And the key goal or vision for this firm is to offer the highest quality or professional quality products and to treat online traders almost the same way I treated my prop traders as a prop shop owner. And the emphasis in that process is the keys are risk control and trader development. So some of the free services offered through Stage 5 Trading, including proactive risk management. You will get a call from me if I see that you're blowing up your account. Position sizing control, live daily pre-market analysis, trade prep, chat room for interactive analysis, and just trade talk, homework sessions, performance reviews, and group webinars. The firm is an independent introducing broker, so we don't have any ties with any particular clearing firm or trading platform. So we represent you, not someone from the industry. The types of accounts that we facilitate in the firm are individual, joint, partnership, corporate, or retirement accounts. We also accept IRAs. And then we also provide access to the main exchanges or most key global exchanges, including Eurex. And the S5 office is located right in the heart of the financial district here in Chicago. We're in the middle of the futures industry, and we're pretty well tied in. On to technology. The access we provide, we're not limited to one platform. We have a very wide array, and you can see on your screen here the S5 Trader with the trade analyzers, of course, the key platform. That's the Gain Capital product, OEC Trader, white labeled to us. They've done a lot of upgrades based on my needs as a trader because I trade on it. It's my primary trading platform, use XTrader and CTS, which we also support and that you see on the screen here. NinjaTrader, we have created the trade analyzer for it, which I've featured on Big Mike Trading before. CQG Trader, Jigsaw, Multi-Charts, Trade Navigator, Sierra, and there's just a ton of them, and I can't name them, of course. We also have the S5 mobile platform for your Android and iPhone. Just wanted to go over the name real quick. Why Stage 5? The name comes from the 4 stages of competence. Stage 1 being unconscious incompetence. This is the level of knowledge that a person has when they first take on an activity. You're not aware of what you don't know. Stage 2 is you become aware that you're incompetent. You become more aware of what you don't know. Stage 3 is conscious competence, which means that you're becoming competent, but you still have to think through the process of trading, walking, driving, whatever the activity happens to be. Conscious competence is the shortest of the stages before we move on to what's called unconscious competence. So Stage 4, unconscious competence is what we do when we are able to drive and talk on the phone or walk and eat. We don't have to think about this process anymore, and that's the key goal for most traders and investors, is to get to the point where they don't have to overthink the process. Stage 5, which is what the firm is called, is a level with what's called transcendent competence. It's the level from which the participant can talk to or speak with any of those stages, basically bringing down to layman terms for those who are in stage 1 or 2, or speaking at a high level for those who are in stages 3 or 4. And I thought it was a very fitting name when we picked it. To connect with us, our website is www.stage5trading.com. If you need to email us, contact at s5trading.com. And of course, we're on Twitter at s5trading. With that, I'll pass the torch over to Ryan. Mike, I don't see Ryan as part of the staff here. I'm not sure how you want to do this.
I can do it for you. So,
okay.
All right. So Ryan, you should now have an option to show your screen, and I'm going to make sure that your headset is ready. Okay, Ryan, are you there?
I'm here.
Okay, and we see your screen. Yeah, just go full screen, and we're ready to go. All right, thank you very much, Morad.
Very good. Thank you, Morad, for the introduction. Thank you, Mike, for the opportunity. I do appreciate it. So this webinar is aptly entitled Tax Strategies for Traders. It is a very pertinent time of year, as most of you, I'm sure, are getting your tax documentation together and getting ready for tax returns to be prepared. So just quickly, let's go over the outline. First, we're going to discuss what is trader tax status, just give an overview of it. Secondly, we're going to walk through the factual requirements to actually get this professional trader / trader tax status classification. Third, we're going to go over tax deductions for professional traders. And fourth, I'm going to give some recommendations and pointers based on things I feel strongly about. First and foremost, persons or businesses who are engaged in the actual business of trading securities, day traders, etc., are considered to be eligible for this preferential tax status called trader tax status. Essentially what this means is that the activity is entitled to the same types of rules that would apply to a normal operating business. This is obviously potentially highly favorable for the business trader, as you can deduct ordinary losses instead of being subject to capital loss limitations that generally apply to normal investors. Furthermore, there are options for retirement plans, self-employed health insurance, so on and so forth, which we'll discuss later on. Essentially, investors are subject to an entirely different set of tax rules and regulations, most pertinent being capital gains and loss treatment versus ordinary gains and loss treatment. So, for example, if you are an investor and you've generated losses on trading securities of $100,000 in the course of a year and you have no gains to offset it, your loss is limited to $3,000, and you have to carry forward the remaining loss into the future until it's used up by gains. If you have trader tax status and you happen to have a bad year, we'll say, you can take these losses as ordinary and you can offset other income to the full extent of your loss. This is an extremely powerful differentiation between investor status and trader tax status. Furthermore, there is a mark-to-market election, which is IRS Code Section 475F. And what this does, it basically allows you at the end of a period to record gains or losses based on the unrealized gains or losses in the positions that you're holding. So if you are holding positions at the end of the year that have significant losses built in, you're actually able to utilize those as ordinary. Again, very preferential tax treatment. I'm going to talk a little bit about the mark-to-market election. It is very pertinent as it relates to TTS, we'll call it. The election must be made by the due date of the relevant tax return. This does include extensions. So as an example, if you have a corporation set up to trade, your deadline to make this election would be September 15th. That is the extended deadline of an S-Corp or corporate return. As an individual, you have until October 15th to make this election if you choose to extend your personal tax return. And as we discussed previously, the benefit of this status is basically that unrealized gains and losses are includable in current income or loss. Again, very powerful. This is the major difference between the investor, your normal investor tax status, and trader tax status. Again, entities that can qualify. Any corporate form, partnership formation, general partnership, LLC, individual, any entity can qualify for trader tax status. It just really depends on whether or not this entity is in the business of actually trading. These record-keeping requirements as a professional trader, they are significantly elevated as it relates to watch sales, which we'll discuss later, and further mark-to-market elections. Many brokers will not send you a 1099-B that has mark-to-market numbers present, so you're going to have to be proactive and notify your broker. Or you basically use a software, if you use various different platforms to trade, that can do the calculations for you. Again, something we'll discuss a little bit later. And if your broker does not provide a calculation for a mark-to-market, you or your CPA are going to have to do this yourself. And if you're doing a lot of trading, it can be very cumbersome, and a lot of this can be mitigated by using software that's built for the industry. Very interesting differentiation here as well. The same person or entity can be both an investor and have this trader tax status in the eyes of the IRS. So what this means is that, again, you can hold a portfolio, a separate basket of longer-term investments, blue chip stocks, limited partnerships, MLPs, so on and so forth. And you can also have a separate portfolio that would be considered as a professional trader. Now, if this situation applies to your personal situation, you must be very careful to allocate your expenses to each activity, because the tax rules that govern are going to be separate for each basket of securities. Some factual requirements here. IRS states that to be subject to trader tax status, an individual or business must seek profit from daily market movements and prices of securities, not from dividends, capital gains, rents, royalties, etc. So you have to be looking to get in and out of positions on a fairly frequent basis to satisfy this prong of the IRS test. The activity must be substantial. So generally speaking, you need to be involved in trading, doing market research, again, getting in and out of positions for more than 50% of your working time. And you must carry on this activity with continuity and regularity, meaning if you're going to start doing it on January 1, you really need to continue doing it until the end of the year, or you dissolve the business at some point during the year. Securities are also defined in the IRC, Section 475 here. And I mean, it's what you would think. Shares of stock, again, partnership interest, limited partnerships, if you're buying and selling those, derivatives, any kind of hedging instruments, notional contracts, forwards, swaps, etc., that will all qualify as a security. The classification between investor and trader tax status is based on facts and circumstances. In the cases where IRS has basically litigated this with individual taxpayers, it's heavily based on facts. They're going to look at, again, the unique facts and circumstances of each situation before making a decision on whether or not a person's a trader, a professional trader, or an investor. And the items that they're typically going to be evaluating are the holding periods for buys and sells, the frequency and dollar amount of trades, the amount of time that you've devoted to the activity, as we discussed, the extent to which you generate and depend on the income for your livelihood. So you need to be engaging in a day trading activity a substantial amount of time, and you have to be, again, trying to earn a living from it. So my observations, based on my review of the court cases that kind of govern the trader tax status, just some kind of safe harbors, if you will. Make sure at least 50% of your time is spent involved in this activity. Again, anything related to the activity will qualify as time spent. So if you're doing a ton of research on a handful of positions that you feel strongly about, this will qualify as time spent towards this activity. It doesn't just have to be executing buy and sell orders. My advice is get an Outlook calendar or a Gmail calendar, something similar, and just document what you're doing every day. 5 days a week, 7 days a week, whatever it is. If you spend 5 hours on this venture, Monday through Friday, put it down just in case anyone asks. You need to be demonstrating that you're relying on this income from the activity to live. This is kind of more of a gray area point. I mean, within reason. If you have a year where you've lost a substantial amount of money in the trading, it's going to be a lot harder to show that you rely on that income. Then it's really going to be more towards how much time you're spending on the activity. But again, this is a point that IRS will look at. Keep the volume of positions held longer than 31 days to a minimum in the portfolio. As we discussed a few slides earlier, try to hold the longer-term securities in a separate brokerage account. As we discussed, they're going to be subject to separate treatment and tax rules. So in your trading account, again, try and get in and out of positions within reason in a month. Don't hold them longer. The frequency of trades, I'd advise at least an average of 1 per day. So if you have a week where you're not making any trades and the following week you're making 14 trades, that's going to average out over the course of the year. But again, the cases have mentioned that the amount of trades is a major element in seeing whether trader tax status can be justified. The fun part, tax deductions available for traders. So, excuse me, if you do get tax trader status, again, any deduction that's ordinary and necessary for the business activity can be deducted. And this is one of the major differences between trader tax status and investor tax status. I mean, we're talking home office, rent, mortgage, utilities, homeowners insurance. You know, I could list 50 different expenses that you could take in the course of your trading business. Anything that you can reasonably correlate to this activity can be deducted. Trading software, computers, internet, the very pertinent items can certainly be deducted. Another major benefit for this status is the fact that you can deduct margin interest outside of the normal rules of the investor tax status. So to give you some point of reference here, as an investor, you have to deduct all your margin interest on Schedule A as an itemized deduction. And if you don't have any investment income in that year, you're not able to deduct any of the investment interest. So you could be in a situation where you're carrying it forward in perpetuity, which is not preferable. As a trader, you can actually deduct it right on Schedule C as an interest expense. And again, this is all hammering the point home that as a professional trader, you're deducting things currently that you would not normally be able to as a retail investor. Health insurance deductions. Health insurance has obviously been a big topic the past couple of years. If you are engaged in professional trading, you are considered self-employed, and you can certainly set up a self-employed health plan, and you can take any relevant health insurance deductions on your tax returns. This would not be the case if you were just considered an investor. You would have to deduct everything on your Schedule A, itemized deductions. And since the rules related to health deductions are so stringent, you probably wouldn't get a benefit. Here, you would get a benefit. So again, just a major, major benefit to having the status. Another great benefit here is the fact that you can set up business retirement plans. If you're consistently making money in trading, you can put a lot of that money away tax-free, and you're eligible for the same types of retirement accounts that any other operating business is. My personal favorite is individual 401k. Very powerful. You can defer up to $53,000 a year, subject to certain limitations, and it is tax-free. And you would not be able to do that normally without this professional trader tax status. Some recommendations and pointers. We discussed software earlier. If you are using multiple brokerage accounts, you really want to get a software that's going to be able to import trading activity and do the calculations for wash sales and mark-to-market itself. It's going to save you a lot of time, a lot of headaches. Just to give you a brief overview of what a wash sale adjustment is. So the IRS disallows certain losses on securities that are substantially similar and are repurchased within a certain time frame after the initial sale. There's a 30-day window, and this actually does apply between brokerage accounts. So if you have two brokerage accounts and you sell a position in Apple, and then 29 days later in a different brokerage account, you buy the position in Apple, and the initial sale resulted in a loss, there's going to be a wash sale adjustment. That loss is going to be disallowed. And if you don't have a software that's keeping track of this stuff, it's very, very likely that you're going to miss some of these deductions, and the IRS can come after you and adjust your return, which is, obviously going to be a nightmare. Our recommendation for software that is built out for just what we've discussed is iTradeMax.com. There are a number of competitors out there. I think iTrade is a good value and certainly something to keep in mind. So as we discussed, and I just want to bring this point up again because this really just hammers it home. Being able to deduct ordinary and necessary business expenses when you're transacting securities that every other person that's not a professional trader can't do is a tremendous benefit. So being able to get this status and making sure that you can defend it is absolutely critical if you want to continue to operate as a day trader and really make a business out of it. And I hammer this home as well. Definitely maintain careful track of all of your expenses. Not only is it going to help make the preparation of your return much more straightforward, but it also is going to help that no potential deductions are lost. You're going to have significant latitude as a professional trader to deduct business expenses, and things that you might think that are not deductible could be deductible. And if you have a good accounting system in place, it's going to help ensure that nothing's lost. If you hold a separate portfolio of securities for investment purposes, it is critical to differentiate expenses associated with the portfolio. So if you have margin interest and you're paying it on a separate portfolio of the long-term assets that we discussed earlier, in addition to your trading portfolio, your professional trading portfolio, we have to make sure that these expenses are identified and allocated between the two, because the rules for the investment portfolio are going to be a lot less favorable than those for the trading business. And again, a simple recommendation, just put those kinds of securities in a separate account. Don't commingle the investment-grade securities with your trading business. Going back to the factual requirements that are going to qualify one for professional trader status, you want to be reviewing the facts and circumstances of your trading year as carefully as possible. You want to put yourself in the position of the IRS. If they look at your return and they look at your calendar and everything else, are they going to be able to disallow your professional trader status? Excuse me. And before you file your return, you want to make sure that you've done that evaluation and you're comfortable with it. Because in a couple of the most prevalent tax court cases, people have had $100,000+ tax bills advanced on them, accuracy-related penalties of 50% of the tax balance. It just could be an absolute disaster if the IRS comes in and reverses your position. So, I mean, it's extremely, extremely important to make sure you're evaluating this stuff. Questions? As Mike discussed earlier, I was going to take questions at the end of the session, so I'd be happy to open the floor.
Okay. Very good. So thank you very much, Ryan. So everybody that has a question, now's the time that you can go ahead and start typing them. And so Ryan, I had a question of my own. What about vacations? You know, is it allowed that professionals can take vacations as long as the averages, like you mentioned, still work out? So even though there's a period of extended non-trading?
Absolutely, absolutely. So it's going to be just based on really the days during a particular year that you're engaged in that activity. I mean, the IRS understands that everyone's going to be taking a vacation, but it's as long as the working days are, again, over that 50% threshold that I discussed, that would be sufficient to sustain IRS inquiry.
Okay. Lloyd says, does this apply to U.S. citizens that reside in Canada?
It would apply to U.S. citizens that reside in Canada. Yes, a U.S. citizen is subject to all of the benefits of U.S. tax law, and the rules are going to be exactly the same for a U.S. citizen regardless of where they live. There are a couple of different foreign tax implications, such as the foreign earned income exclusion, and that's really a whole other webinar in and of itself.
Yep.
But yes, the laws that relate to U.S. citizens are going to apply regardless of where they reside.
Lana wants to know, can they set up an LLC as a 105 or HRA plan, have one employee be her husband, or do you recommend an S Corp?
I would recommend an S Corporation.
Jerry wants to know more specific details about how wash sales are handled on the actual return.
Sure. So in the return itself, on Schedule D, you're going to report all the proceeds from sales for the year. You're going to report your losses based on the 1099-B, so what's reported to IRS, and then there's going to be an actual adjustment made right on the face of the Schedule D for any wash losses, and it just has the effect of reducing the loss you take. So if you have $5,000 of losses, including $1,000 of wash sale loss, when you add back your wash sale, you're only going to have $4,000 of tax-deductible loss. That's how it works.
Jason's asking that, just for clarification, that you need to qualify for professional status every single year, right? So if you have professional status for this tax year, next tax year you may not. You could fall back to just a regular investor status, correct?
That is correct.
Steve wants to know, what is the tax rate bracket for high-income traders?
It's just going to be subject to the same brackets as anyone that's working, say, a normal W-2 job.
Right.
So it can go up to 39.6% at the federal level.
Seth wants to know, he says, if you're trading at a prop firm and they're issuing you a 1099, can you still claim professional status?
If you're trading at a prop firm, that's your trader business, absolutely.
Okay.
So the IRS, that's a good question. The IRS will aggregate the sum of your activities. So for example, if you're doing some trading on the side and you actually work at a prop trader, I mean, you're certainly going to be classified as a trader. That's your profession, right? The IRS literally clamps down on persons who are, maybe semi-retired and are hanging out at home and executing 100 trades a year, and they try and take the status. But
right.
Yeah, I mean, if you're in the normal profession of trading, you're certainly going to be able to get that status.
Naresh says, what about trading part-time in futures? I'm trying to understand. Trading part-time in futures, is it considered professional trading? Yeah, I'm having a hard time understanding his question. I think he might be asking if it's not your primary source of income, then you would not qualify, right?
You would not if it's not your primary source of income, but that's subject to, again, the amount of time you're spending on the activity. So you could be getting passive income from we'll call it IRA distributions or what have you.
Right.
And you're spending 80% of your time trying to be a trader, and
okay.
you still qualify.
Okay, so it's primarily based on time, not necessarily dollars.
time, frequency. The dollars is one piece of the puzzle,
Got it.
really you're going to look at the amount of time spent and the frequency of trades.
Okay. Francisco's asking, what about non-U.S. I think he says non-U.S. citizens that are living abroad, like in Europe or Switzerland. So this would only apply to U.S. Citizens or entities paying tax, right?
That's correct.
Yeah.
U.S. citizens, resident aliens.
Yeah.
Yeah, that's really more of a foreign tax question.
Right.
For,
right.
frankly, a tax advisor in Europe.
Let's see. Julie says, Ryan, what is the first step to apply for the trader tax status? Can I apply for the designation now on the tax return that I'm filing for last year, for 2014 tax year?
Sure. So there's no application process per se. You just have to make sure that if you take a position on your return that you're a professional trader, you can defend it if the IRS asks.
Right.
So again, you'd have to review the facts and circumstances of your 2014 year, make sure you're comfortable taking that position, and if the IRS asks, you got to be prepared to defend it. It's unlikely they would, but that's how it works. There's no formal application process.
Right. Okay. Tyson asks, what if you have separate income besides trading that you take the majority of your deductions against? Is it still beneficial to elect trader status?
That's highly dependent on the facts and circumstances of each case. I mean, if you are generating margin interest, investment interest, it's certainly going to make sense to take those kinds of deductions against professional trader status. What you'd want to do is probably just take the ones that are really most salient to tax trader status, such as margin interest, and then take the remaining expenses on your other activity.
Right. Are you able to, this is my own question, are you able to tell us the disadvantages of claiming status other than the paper requirements? I know, for example, there are going to be some, and this might be outside your realm, I don't know, but there are some disadvantages as far as what you pay to the exchange for data feeds and such. Do you know of anything else?
Well, the glaring one that I'm aware of is it relates to the mark-to-market election. So if you have a large amount of unrealized gain at the end of a year and you're making the election, you're going to pick up this ordinary income, whereas an investor you would not, because you're not going to pick up any kind of, there's not going to be a realizable event until you actually sell a security.
Mm-hmm.
So if you have, again, a ton of unrealized gains at the end of the year, you're going to pick that up as income.
Right, instead of deferring it until it's sold, right?
Yep.
Okay. Lloyd wants to know if he's trading out of an IRA, does all of this still apply?
It would.
Okay. Let's see. We got a lot of other questions. And also, Ryan, I know that you're pretty busy given that it's tax season, so just let me know anytime that you need to go. Okay, so Babu is saying, hey, Ryan, thanks for the webinar. If he's trading full-time, for example, 50 round turns per day, and he has a trading loss of $35,000 in his trading account, but he has a separate full-time job with W-2 income that is, over $100,000. Can he still get this professional tax status?
He's got to look at how many hours he's spending over the course of a year in this activity and how many trades he executed. If he's executing that many trades a day, I think there's a very good chance he'd qualify. But again, in that case, I think it'd be really more based on time.
Okay.
If you're working 8 hours a day and trading 2 hours a day, there could be an issue if the IRS asks.
Right. How you're able to do that. When do you sleep? Okay. Joanne says, hey, if you're trading off your IRA, you're not living off of your profits. Does this mean that you cannot qualify?
Well, that's one piece. It's really, you have to look at it in light of all the facts of a particular case. The livelihood piece is the least important to the IRS. If you can just, again, demonstrate that you're spending most of your time doing this activity and you're trading quite a bit, you're not going to have an issue with that income piece.
Okay. Lawrence says, does an S Corp have to claim professional status, or is that only available to individuals?
An S Corp does not have to. It can
elect. It can, right. Any entity can, right?
Correct.
Okay. Michael says, was there any, okay, so he joined late. Is there any review of the ACA requirements and the issues arising from non-enrollment, such as Obamacare? I'm not sure how that, is that?
It's kind of outside the scope.
Yeah, that's,
we can discuss, just briefly comment again, I'll bring up the point about the health insurance. If you are paying health insurance premiums through the exchange and you are a professional trader, you can certainly deduct those health insurance premiums as self-employed.
Right. And some, just as a blanket statement, some of these really specific questions, guys, you'll be much better off if you email Ryan directly, which his email address is up on the screen. That way you can get some personalized help. Okay, let's see. We got Michael's asking if your trading gains are on a Schedule C, are they also subject to a 3.8% net investment tax?
They are not.
Steve says he has an S corp for another business. Can he use that same corp for trading revenue?
Yes, in that case, it is critical to maintain an accurate calendar, though. I mean, frankly, I don't think it's a good idea. Just set up a separate entity, because IRS likes to see as much separation between activities as possible. It's just much cleaner. But you can do that. Again, you'd have to demonstrate that the amount of time you spent on the activity was significant.
Okay. Lisa says that...
Ryan, 1 second. Mike?
Sure.
I've run into this with one of my traders in the past who was a freelancer as well as a trader and put everything on one corp. By making sure that you have a clear calendar, for around $500 and a franchise fee, depending on your state and so forth, I can tell Steve that it's very, very beneficial to just go ahead and create another entity, even if it sits there dormant. Because once they start going through, once you're having to prove that calendar separation, it can get really messy depending on the other business and how you're keeping your expenses for that other business. You start to risk your main S-Corp business for the benefit of trading, and it's not worth it. Sure. I just wanted to throw that in there.
Yeah.
Yeah, I agree, Morad. I mean, my personal recommendation to make it simple is set up a single-member LLC and engage in trading that way if you're going to do it.
Lisa says, hey, my broker sends me a daily report every day for all of my trading. Would this basically qualify as recording my trades, my trade activity on a calendar? In other words, if a trade report has timestamps and so forth that demonstrate that she was trading, does that replace a calendar, or does she still need a calendar?
She's still going to need the calendar because that's only going to show when your buys and sells are. I mean, you really have to account for how many hours a day you're involved in the activity.
Okay. In other words, I mean, I guess you're saying that I could put in those buys and sells a week ahead of time, technically speaking, and not necessarily have been there spending 8 hours a day in front of the computer.
Right.
Okay. All right, Joanne.
A couple more?
Yeah. Just let me know anytime you need to go. There's like 20 more at least, but you can stop me anytime. Joanne says, if you qualify for professional status, does this mean that you need to identify yourself as a professional for your data feed? So yeah, Joanne, I mentioned that. Morad probably knows more about that. Maybe we can ask him.
Yeah, I can address that, Mike, since Ryan won't know about that. Under the exchange, you're self-declaring whether you're a professional trader or not. For those who don't know, the difference between a professional trader and a non-professional trader when it comes to futures is a professional trader is going to have to pay around $340 a month in fees, whereas a non-professional can pay $15 a month and get the same data from the exchange. The way the exchange identifies professional is several tests, and the key one being, do you do this on a do you advise on a professional basis? Do you have membership in any exchange, whether it's FINRA, SEC controlled, or CFTC controlled, options or whatever?
Right.
The third test is so it's licenses. But really, it's something you have to decide to declare. There's really no way for the exchange to be able to tell. And if you are not trading someone else's account, in other words, you're not a trade manager on someone else's account, then you are an individual.
Right.
So you need to separate what the IRS considers professional for tax treatment versus what an exchange considers professional, because those are completely different things.
Very good. Dory says, hey, can you tell me the advantage of using an LLC instead of a sole proprietor for a trading company? I don't see any advantage to justify the additional complexity.
Well, there's really not going to be any additional complexity per se. For tax purposes, it'll be treated the exact same way, a single member LLC and a sole proprietor. It cannot. No, the tax characteristics of both an LLC and a sub-S corporation is that there's flow-through treatment directly to the shareholder or member, so you're going to be paying tax currently on any profits that are in the entities.
Okay.
Okay.
Sorry, my internet dropped out for a second. I'm back. So, Ryan, do you have time for more, or do you need to go?
Maybe 2 more.
Okay, let's see. Jeff wants to know, would it be better to pay taxes as an individual or to set up an LLC if he's considered a prop trader? He's trading for a prop firm and being issued a 1099.
The tax rates are actually going to be the same, so it's not going to matter too much. I would actually recommend setting this separate LLC up, though, just to clearly differentiate the activity.
Okay, Jason's asking about the additional self-employment taxes and so forth. Would you recommend setting up a LLC or S corp?
For an S corporation, you can avoid some self-employment tax, and it's highly contingent on how much of a wage you're paying yourself. If you're able to reasonably predict that the S corp is that the trading activity is going to generate, we'll assume $100,000 of net income, bottom line, during the course of a year, you can pay yourself a wage of, say, half of that and save some payroll/self-employment taxes.
Right.
With an LLC, every dime of net income is going to be subject to self-employment tax.
Lawrence is asking, can you explain how the IRS treats the 1256, the 1256 contract or futures contracts, how they're taxed differently under trader status?
That is a very good question. I'll have to look into it to advise more clearly, but just based on my knowledge of 1256 contracts, it's actually not the best thing to do to elect professional trader status with any 1256s, because 60% of the 1256 is subject to long-term capital gain, 40% is short-term. So with the professional tax trader status, long-term preferential capital gains rates go out the window. So I would actually recommend inventorying any 1256 investments in this separate investor account that we discussed.
Okay. And we'll do one more question and say it's the last one, because this one might apply to a lot of people. Rob says that his primary income, or his only income actually, is Social Security. How would this apply to him if he were to try to elect professional status?
If he's trading every day, and this is the only other source of activity, of business activity, quote unquote, that he's engaged in, I mean, he'll be fine. Okay.
So, Ryan, I know there's a million and one more individualized questions that are best left by reaching out to you directly. So is it better to email you or go to your website? Which one do you prefer?
Email's fine.
Okay. Very good. So, guys, if you need some tax help, Ryan's your man. You can email him right there. And Morad, I thank you for introducing us to Ryan and for hanging in there today to help us answer questions. Guys, I'll post the recording on YouTube sometime tomorrow, and you guys can go back and check out the recording later. All right. Thank you very much, Ryan.
Great.
Thanks, Morad.
Thanks, Mike.
Thanks, Mike.
Morad. Appreciate it.
All right.
Thanks for having us.
Bye, everyone.
Bye, guys.